How's it going, everyone? It is Andre Williams, and I'm excited to do this video today. What am I talking about? I'm excited to do these videos all the time. So what I want to do is show you a stock along with the warrants, which is coming from a SPAC that is in the EV space. It's kind of been flying a little bit under the radar. It has gotten some attention, but I haven't heard many people talk about it, and this is actually the best time to actually take a look at it and look at how much profit we can make and how we can literally go off buying the rumor and selling the news. I got to throw in the disclaimer. I'm not a financial advisor, and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. As I told you guys previously, the way I make money off SPACs is by buying the warrants and buying the stock, waiting for the rumor and selling the news, all right? And I want to kind of show you guys the strategies and the things that I do. So this particular stock in general, you could do the same thing and you can literally make 100%, 200% on your money. I've done this on many different occasions with a lot of SPACs, and I want to share it with you guys. I'm going to be breaking down the technical analysis, and then I'm going to be breaking down the company I'm going to be talking about, which is CLII, that's supposed to be merging in the second quarter with EVgo. I'll be talking about the catalyst with EVgo and why it has the KLTs of why I know, like, and trust the company, and I can see it having a similar run-up to SPE that's going to be merging along with ChargePoint. Very similar. Am I saying it's going to be the same in regards to reaching the price that SPE got to, which was just under $50? No. Potential, it could happen, but even if the stock goes to only $30, which is CLII, it could still be a game changer in regards to how much profit we can make. So I'm going to attach those videos right now, and I'll be talking to you guys afterwards. All right, so I know what you're saying right now. They're like, you're doing an analysis on CLII. Why do you have a chart up for SBE? Warrants, to be exact. And the reason why I'm doing this is that I'm about to show you just now how important this is and how great this can be for anyone who may have a small account or they want to make extra profits if they're currently invested in the stock. That's why you're seeing the SBE warrant up on the screen. So what warrants are, pretty much they give you the opportunity to actually exercise them, but at the end of the day, we're going to use it as a profit strategy. So we're not really worried about holding these warrants all the way through. We're not interested in that, and that's not the point of this video. What the point of this video is how you can make some serious money off of warrants, especially with CLII, by looking at SPE ChargePoint, because ChargePoint is the same, or it's very similar, I should say. It's not the same, but very similar as in regards that it's a charging station company like EVgo, which EVgo is going to be merging with CLII. All right. So as we could see, before we knew any information in regards to Swiftbat Energy doing a merger with ChargePoint, the warrant price was around $3.71. Take a look at that. All right. Started moving up, ended up getting to a high of $24.60. That's how much the price of the warrant got to, $24.60. And at the current price of where SPE is right now, we have $20. Let's just call this $20. This is just for the warrant alone. We're not talking about the actual stock. We know that the stock itself is trading in that mid to high 30 range. We know that already. We're clear about that. Made a video on that as well. So I want you to remember this. Right? Remember this. That is the price of the warrants that we currently have right now, right? So now, we're going to flick back to CLII, which is what we're doing analysis on. Look at the price of the warrant. Before the news was announced, it was $3, reached a high of $8.40. And now it's kind of trickled down back to $5. This merger will not be done until the second quarter of 2021, which is this year. So what this means is there's a lot of time for a run-up. By looking at the chart alone itself, we can see there's a lot of consolidation in these areas, right? Between the $19 to $20 range on the actual stock. But for the warrant, we see that it's around $5 and the $4 range. This is part of the reasons why I showed you guys a chart on SBE first. Am I saying that CLII is going to run up like SPE? It can. Can it run up to the same amount in regards to the stock price? That I cannot predict, but I do see a run up because, again, the merger is not until the second quarter. A lot of people are not giving this stock that much attention. They're focusing on a lot of other stocks. So this is the opportunity that we need to seize before it gets closer to the merger and more news and more catalysts come out. So if you can get this warrant, even at this current price, that's a good deal at $5, because we know if it makes a $4 move, the stock now we're talking about, the warrant is going to get to $8.40. So now, that is a great opportunity to make some extra profit, make some good money. Because right now, the warrant price for CLII is at a steal. You have the opportunity where you can double, triple your money easily, right? So now, let's take a look at the stock price to make things more straightforward here for you guys. So the stock price, we already know, when it's right around $20, the warrant price is going to be around 5. Let's call it 5. It's in the high 490s and stuff like that, right? So here at 20, when this stock makes a run up, I definitely see it going to $25. It's definitely going to revisit here and pass this $23 high where it reached, or 24 for anyone who may have gotten it. Didn't stay there that long. But I could definitely see a run up to $25 easily. And if this stock reaches $25, $26, $27, what do you think happens with the warrant? The warrant's going to move right with it. The warrant can get to 12, 13, 14, 15. Even if this stock runs up even close to what SPE and ChargePoint did, we're looking at a $20 warrant. But right now, the present value is at $5. So this is something I'm going to be playing. I'm going to be buying these on Tuesday. As far as for the long-term potential, let's just go back. As far as for the long-term potential of EVgo, I definitely see it. EV is going to be the future going forward, right? For the next 5 to 10 years, there's going to be more electric vehicles on the road, and they're going to need to be charged. So this is a company I'm definitely going to have in my long-term portfolio. But what I am going to do is make sure to load up on those warrants. So again, we buy the rumor, we sell the news. These warrants are going to go up in value. And again, as soon as when it hits that target, whether your target is 100%, mine's going to be 100%, to be honest with you guys. I'm not selling until at least it hits 10. I definitely could see it hitting 15 and so forth. You can make some extra profits and move that somewhere else. Again, this is a swing trading opportunity right here. If you're going to, like I said, if you're going to be holding long-term and stuff like that, you could do that. And again, the current price where it's at is very, very fair. If you get it even in the 17 range, the 18 range, that's good as well. I just wanted to show you guys that. That's a strategy that I'm going to be using because I definitely see this stock running up. They have a lot of partnerships going on right now, and also the catalyst that they had on the 11th, which I'm going to go through you guys very quickly, ended up doing a partnership in regards to having chargers at their stations where you can charge Tesla, since Tesla wants to go with a proprietary system for the charging stations so their vehicles can be charged at their stations alone. But since EVgo, you're going to be able to charge Tesla there as well. Again, I just still see some more catalysts. This company's doing some great things. So again, it's just a way for you guys to make some money in the long term. You also can make some more money in the short term. All right. Just wanted to share that with you guys. All right. Peace. With CLII, as you can see, it was announced January 22nd that climate change SPAC soars 80% amid plans to merge with EVgo. All right. So here's what we need to see and take a look at in regards to the potential of why I see this stock price moving further. And on top of that, why it's also a good company as well. All right. So the deal will be valued at $2.6 billion and raise up to $575 million in proceeds for the firm, which will allow the company to accelerate the expansion of its electric vehicle charging network. The EVgo merger touches on two hot trends seen in the stock market in recent months: the proliferation of going public via SPAC instead of the traditional IPO route, and giving investors exposure to a fast-growing electric vehicle space. Through a strategic partnership with General Motors, EVgo expects to add more than 2,700 fast chargers to its network and over the next 5 years. The company also has corporate partners that include Uber and Lyft, and EVgo has worked with Tesla to enable native fast charging on its EVgo network. David Crane, the CEO of Climate Change Crisis, so CLII, said of EVgo, "It has a distinct and highly advantageous owner-operated business model, supported by strategic partnerships with key industry players, singularly focused on essential and growing factor necessary for supporting widespread EV adoption." All right. And then here comes the next article. Now, here's the most recent news. On February the 11th, EVgo further extends nation's largest fast charging network to Tesla drivers. EVgo, the nation's largest public fast charging network for electric vehicles, is expanding its offering for Tesla drivers to charge at more EVgo stations across the country, upgrading hundreds of its stations with integrated Tesla connectors. This is huge. This will further EVgo's reach as the only EV charging platform that is both 100% renewable electricity powered and capable of charging all 3 fast charging standards: SCHA demo and SAE combo, or CCS and Tesla, and without the need of a separate adapter. This, combined with EVgo's industry-leading uptime of 98%, will further extend the benefits of EVs to more U.S. drivers and reduce greenhouse gas emissions from the transportation sector. We already know that the Biden government, they're literally wanting to go clean, supporting green energy, supporting the EV market. That's what I'm saying. There's a lot more room for this stock to run. Let's go a little bit further. EVgo will deploy more than 400 integrated Tesla connectors at existing EVgo stations, with an additional 200 connector reserved for new stations planned for 2021 in key cities including San Francisco, Los Angeles, San Diego, Seattle, Denver, Dallas, Austin, Washington, D.C., Salt Lake City, and Miami. EVgo first launched the integrated Tesla connectors at its location in San Francisco and Los Angeles in December 2019, positioning itself as the first multi-standard fast charging platform to offer Tesla connectors in the U.S. and remains the only third-party fast charging network to be incorporated in the Tesla navigation system in the US. Again, this is why I'm very, very bullish on this stock, and where I see there's a lot more time for it to run up before the merger happens in the second quarter. All right. I'll talk to you guys. All right. So you guys see my strategy, and I got to throw out the disclaimer. I'm not a financial advisor, and this isn't financial advice. So when you do invest, just know you're doing it at your own risk. Considering the catalyst, considering what this company has going in regards to growth, considering 5 to 10 years from now, and even going forward into the future, EV market is going to be the play. Again, we have the Joe Biden government all about clean energy, right? The EV space, making sure that, you know what, we do respect the fact that, hey, you know what, climate change is a huge priority right now. That's why I feel like with this particular stock and with this merger going through, we can make some serious money. If you believe in this stock long term, I talked about in the video, how do you want to approach this? If you believe this stock is great for a short term or for a swing trade and also making money off the warrants, the potential is definitely there. And as I do with all the other stocks that I mentioned on this channel, I will be continuing to do any updates. I will let you know if I decide to say, you know what, I'm done with this play, and keep you guys inside the loop, all right? Hope you guys enjoy your Sunday, enjoy your Valentine's Day as well, and we'll talk soon. Peace.